and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Srishti Sharma and with me is Kavita, and you are catching us live from SBI Live Studios. And this is the show where we get all your stock-related queries answered. In a short while from now, we will connect with our experts, and you can connect with us live on the WhatsApp number that will be flashing on the screen. But before that, a quick look what the markets are up to. So, Kavita, seems like a day of profit booking on the benchmark indices, where Nifty is down almost 70 odd points. Nifty banked as well, taking a bit of a U-turn, and so is the broader markets. They are not that supportive in today's trading session, especially when we see the advance and decline ratio, though with respect to the index, they are trading absolutely flat right now. But when it comes to some of the movers, it's the metal pack that is indeed shining bright, and especially the aluminium counters on the back of that 52-week high touching for aluminium internationally on the back of supply concerns. And back home, it's stocks like Hindalco, Nalco, they are shining bright in today's trading session. ICICI Bank, ONGC, these are our top movers. But on the flip side, it's the FMCG major that are reeling under pressure. Stocks like HUL down almost 3%. Colgate also down almost 3.5%. And even some of these pharma majors like Cipla, even after that deal, we have been highlighting that the stock is already up almost 5% in the last 5 days. And there was some anticipation of this deal coming in. But do remember, it's not an exclusive deal that Eli Lilly has signed. So it's a 3% cut coming in on Cipla, Kotak, Ultratech. These are your top losers when it comes to Nifty 50. So all in all, a decent day, what we can call it, after that stellar run-up that we have seen of late. Markets are seen to be taking a bit of a breather, but nevertheless, they are holding that level of 25,800 levels. Kavita, anything that you are spotting?
Nothing. Let's begin the show and let's get our stock-specific queries answered, because we have our viewers lined up and also our guests ready for the show. We have Kunal Parar and Kunal Bothra, both the Kunals today, to help our viewers with their stock-specific queries. Hi, good morning and welcome to the show. And let's start taking our viewers' WhatsApp questions. We're also dialing them up, but then this is Sangeeta from Pune. And Kunal Parar, I'll come to you first. I don't know how to address both the Kunals today, so maybe we'll be starting with the last name. So Sangeeta from Pune, she's asking about a strategy, a long-term strategy in Cyient, KPI Tech, Wipro, which is the good one for the long term. And yeah, that's it. Can you hear me?
Hello.
Hi, can you hear me, Kunal?
Yeah, now I can hear you.
Okay, perfect. I'll repeat the question. This is from Sangeeta from Pune, and she wants your take on a long-term strategy in Cyient, KPI Tech, Wipro, which is the good one for long-term.
Okay. Well, good morning, and for long-term purpose, I think one should focus on Wipro. Right now, Wipro is trading at 244 level, and the stock has already formed its bottom. No doubt, we have been witnessing some kind of negative sentiment that has been created from US, but I think that is not going to be lasted anymore. So I think one should focus on the Wipro. If you talk about long-term target, first target comes at 272, and if it breaks, then further upside would be there up to the level of 320. So among this stock, I think one should focus on this Wipro. And I think you were confused about to whom, two Kunals are there, and you were confused. So you can call me KK also.
All right, that's the take coming in on the IT pack. Indeed, some of these counters have been making decent moves of late. But let's move on to another query then, and this one is coming in on Bajaj Finance. Kunal, Bothra, if I can have your take on this one. This query is from Subro from Bangalore. He's holding shares of Bajaj Finance. What are the good levels to enter this particular counter? Good at current levels. He's looking for a long-term investment.
Well, not great at current levels, I'll say, for Bajaj Finance. But then I think if you can just wait out for maybe some bit of a dip, some bit of a correction or a cool-off in the prices, then I think it could be advantage, because the stock in the last 6 months has done exceptionally well. So I remember from the March, April lows of 850, 900 thereabouts for Bajaj Finance, it's moved up to almost that 1100 mark. And it's a very steep kind of an uptrend for the stock price. Even on the short-term charts, I think it's almost 70 or 80 points higher than the 50-day moving average. So that is also one end of a divergence the stock is going through. So that makes the trade a little bit more tricky. Yes, it's an attractive chart. Yes, it's one of the leaders from the entire NBFC pocket, which has done reasonably well over the last few months. But then I think you have to try and time the stock, or at least look for better prices, if not try to time it precisely. So I would suggest that just wait for some bit of more correction. You can start off with levels sub 1050 odd for Bajaj Finance as a good buy on dips for the stock.
Do you recommend an SIP approach?
Maybe not an SIP approach, because the stock doesn't give you that consistent bout of a correction on the long-term charts.
Sure.
But yeah, I think from 1050 you can start buying maybe at tranches, for dips, say closer to 1000 levels. So 1000 to 1050 could be a good buying range for Bajaj Finance.
All right, a staggered buying on tips, and to start off with 1000, 1050 can be good levels. But then let's move on. And other question coming on SRF, which is bought at 600 per share, and this is a regular viewer, Professor Thomas George. Kunal Parar, I'll come to you. Okay, this is a phono query. Okay. No, we don't have him on the phone line. This is a WhatsApp query. Okay, Kunal, what would you recommend?
If you talk about SRF right now trading at 3045, trading over its 100 days moving average, not only these, if you talk about the larger daily time frame as well, stock has been trading in a strong uptrend only. I think, one should hold this stock as of now. We may see good bounce back as well up to the level of 3300. And if stock break this level, then further upside would be there up to the level 3500. So, yeah, from my side, it's a hold recommendation.
Coming in on SRF, let's watch out for that. But Kunal Bothra, the next query that I have is coming in on Samvardhana Motherson. This query is from a viewer. He actually didn't share his name, but he's holding 135 shares of Samvardhana Motherson, priced at 135 itself. What's your take on this particular counter, and any targets in the near term? Because of late, so much of news flow around the global automotive news, how some of their clientele are facing some pressure. Back home, the demand is stable, but not much exposure. But what are the charts telling?
See, I think 135 is, if that's your purchase price, which means you've bought somewhere at the peak in 2024, because as I can see on the charts, 140-ish thereabout is the all-time high for Samvardhana Motherson. And I think from there, the stock had gone through a sharp correction. I'm not sure whether you've looked to average into your holdings, in that phase of correction. But if not, then I think at current levels of 100, 105 for Samvardhana Motherson, I think it's a good range where you can look to start averaging out, so that you can lower your cost price. I sense that many of these auto-anch names are going to a breakout mode. We've seen Samvardhana Motherson also recovering very well. Even in the last, I think, the month of September, October so far, where you've seen the stock recovering from 90-95 levels to now 105 odd mark. So I think in that sense, it seems to be a stock which is nearing a breakout. I would suggest an averaging out closer to this range of 100 to 105 for Samvardhana Motherson.
All right, but then let's shift gears and let's talk about Colgate. Colgate is under pressure after reporting a disappointing earnings show clearly. So, however, its historical trends show that this weakness has sustained for a few quarters. Market share loss and GST disruption has, it's only painting a bleaker picture. But what has been going wrong with its performance? Snehi, our colleague, is with us to take us through Colgate's headwinds. Snehi, so what's wrong exactly? 3.5% almost. The stock is also down in today's trade.
Well, yes. So if you take a look at Colgate Palmolive, the stock is under pressure today on the back of its quarterly earnings. But this has been the case over the last few 3 to 4 quarters as well, because every time Colgate comes out with its quarterly numbers, recent times, we have seen that there has been pressure on the stock. Let's understand what is ailing Colgate India, what is going wrong for them continuously. If you take a look at the trend in terms of what the street was estimating versus what the actual number has been, on the revenue front, in quarter 2 FY25, exactly 1 year ago, the revenue had come 1.5% lower than what the street was estimating, and then that has only kept on increasing. This time about, the number has come 6% lower than what the street estimate was. Similarly for EBITDA also, this time a 3.5% downtick compared to analyst estimates. And for net profit, that also trend seems to be getting worse, because last quarter it was down 7.5% compared to street estimates, and now also lower by about 6%. If you take a look at their margin trajectory, yes, there was a peak in quarter 4 FY25, credit where credit is due, and this time too they have been able to sustain their margins around that 30-31 mark. But remember, the key here is that they have guided for margins between 32 and 34%. So despite being stable around that 30-31% mark, it is still much lower than what they had guided. In terms of their volume trajectory, this time last year it was an 8% uptick, but after that it's been one way downhill for them, with quarter 3 at 4%, quarter 4 absolutely flat, and after that we've peaked into negatives at quarter 1 FY26 being at -3%, and right now also the analysts are estimating that there has been a cut of anywhere between -3 and 4% in terms of their volumes. If you take a look at their earlier management commentary, market weakness will continue in the near term, but recovery is expected in second half is something they have said. EBITDA margins, once again, they've guided between 32 and 34%, and quarter 2 is below their guidance. So if you take a look at the headwinds that are at play over here, this is the third consecutive quarter where their revenue has fallen more than 6% on a year-on-year basis. So steep cut on that front. The inverted duty structure continues to weigh on their overall margins. They're structurally disadvantaged under the new GST regime, at least in the near future, because remember, Colgate's entire portfolio is only oral care, and a sharp drop from 18% to 5% is a big knock on their margins, which is unlike the case for HUL and Dabur because they have diversified portfolios. Also, based on HUL's earnings and Dabur's quarterly update, we understand that Colgate could have lost market share, so that is also another headwind over here. Brokerages too today on the back of quarter 2 have maintained their negative stance, and target price cuts have been the theme across the board. All of these headwinds are at play for Colgate, so outlook is going to be on what the next quarter and the second half of the year pan out and how they pan out for Colgate.
All right. Thank you so much, Snehi, for getting us all those details. But time now to slip into a very short break. Don't go anywhere. We'll be right back on the other side.
Welcome back. You're watching Buy Now, Sell Now, and we are answering your stock queries. Next question is coming up from Mr. K. Narasimha Reddy, Hyderabad, and Kunal. This question is for a long-term strategy, two auto or auto ancillary counters he wants a recommendation on.
So I believe Samvanda Motherson is something which we discussed earlier. That's something which you can look at current levels. I would be bullish on the stock because I believe that the major grind or the correction for the stock from 2024 highs, I think that's now behind. We could be looking at the stock going into a decent recovery on the upside. You may also look at many of the tire names. Now, it's just that they're a little bit expensive at the current price points, but I think JK Tires is something which I believe looks extremely strong on the short to medium term charts. We've seen a classical rally phasing out for many of the tire stocks in this last many weeks of the price uptrend. Many of these stocks are placed at multi-week highs for themselves. So short-term wise, they may be a little bit expensive. So you might wait for some bit of correction. But I think as a trade, I believe many of these tire stocks are getting into a second level of an uptrend, which could be indicative that this could be a multi-month uptrend for many of the tire names. So these are the two places within the auto anch names which you can concentrate on.
CEAT and JK Tire is the recommendation for long-term purchase. But then let's move on. Then up next, an exclusive roundup of the week's key developments from Maharashtra in our Maharashtra 360.
From transformative development plans and next-gen tech adoption to grassroots empowerment and citizen welfare, here's a look at what's making news this week across the country's largest economy in our exclusive Maharashtra 360. CM Fadnavis chaired the meeting of the Vikasit Maharashtra 2047 Advisory Committee, where the draft of the state's vision document was approved. The roadmap outlines Maharashtra's development targets in 3 phases to achieve the vision of a fully developed and sustainable state. The Vikasit Maharashtra 2047 vision document sets a 3-phase timeline, from foundational reforms by 2029, high growth acceleration by 2035, to making Maharashtra a global economic leader by 2047. The plan rests on 5 pillars: modern infrastructure, rural and agri-tech empowerment, AI-led governance, sustainable energy and employment-driven growth. Targets include pushing the state GDP beyond 50 lakh crore rupees, ensuring 40% renewable energy dependence and full digitization of government services. Maharashtra government has sanctioned the disbursal of yet another massive tranche of financial assistance to farmers who suffered losses due to excess rainfall and floods. The financial assistance will benefit farmers in Nagpur, Amravati, Pune, Nashik and Konkan divisions. The fresh 3,258 crore rupees package will cover over 33 lakh farmers across 23 flood-affected districts. So far this season, Maharashtra's total Kharif relief has crossed 7,500 crore rupees, among the highest in recent years. CM Fadnavis performed the Bhumi Pujan of the Mahatma Jyotiba Phule Research and Training Institute, Mahajyoti in Nagpur. The new institution aims to empower OBC students through education, training and financial inclusion. It's a key step towards creating equal opportunities and nurturing skilled, self-reliant youth across Maharashtra.
म्हणून मी आपल्याला निश्चितपणे सांगतो, ज्या ठिकाणी मराठा समाजाला न्याय देण्याची वेळ आली त्या ठिकाणी मराठा समाजाला न्याय दिला, पण मराठा समाजाला न्याय देत असताना ओबीसी समाजावर आम्ही कधीच अन्याय केला नाही आणि ओबीसी समाजाच्या पाठीशी पूर्ण ताकदीने आणि खंबीरपणे आम्ही उभे आहोत.
The state has launched over 60 hostels to provide quality accommodation and learning facilities for OBC students. To promote self-reliance, beneficiaries will also receive interest-free loans of up to 15 lakh rupees, enabling them to start their own ventures. The newly launched Mahajyoti Institute in Nagpur will serve as a hub for research, training and skill building. Construction of houses has been ongoing in full swing in rural areas under the Chief Minister's Samruddha Panchayati Raj Abhiyan. Rural Development Minister Jaikumar Gore, who reviewed progress, has directed officials to fast-track clearances and ensure landless families are given top priority. So far, Maharashtra has completed over 72,000 rural homes, aligning central and state schemes to bridge the housing gap. The Abhiyan also links housing progress to the larger goals of sustainable village planning, improved amenities and grassroots governance under a unified monitoring system. Deputy CM Eknath Shinde inaugurated the state-of-the-art Dharmveer Anand Dige Natya Mandir in Ambernath. The facility is designed to serve as a local cultural hub, enabling citizens of Ambernath and surrounding areas to access theatre, arts and events without travelling to Kalyan, Dombivli or Thane. The Natya Mandir boasts a 658-seat auditorium and all modern facilities to host stage plays, cultural shows and large gatherings in Ambernath. The auditorium is fully equipped with all audio-visual and performance facilities. Previously, local residents had to travel to Kalyan, Dombivli or Thane for theatre. Now the city offers its own venue. Deputy CM Ajit Pawar chaired a key meeting in Baramati that laid out a new roadmap for the cooperative sector. After focusing on agriculture, Maharashtra will now use artificial intelligence to drive holistic development in cooperatives, speeding decision-making, improving data systems, increasing transparency and guarding against fraud. Maharashtra is ushering in an AI-driven era for its cooperative sector, using technology to speed up decisions, strengthen data control, and ensure transparency in day-to-day transactions. AI tools will help detect and prevent fraud early, making cooperatives more accountable and efficient. The government will assess technical and financial feasibility, forge partnerships with global tech leaders like Microsoft, and establish centers of excellence to develop scalable AI solutions tailored for cooperatives. Those were all the news updates we could pack for you in Maharashtra 360. Until next week, take care.
Putin has dismissed the impact of sanctions, saying that the serious US sanctions will have certain consequences for Russia, but maintained that they will not significantly impact its economy. Trump responded to the comments saying they will find out in 6 months.
More comments coming in from the White House. Press Secchi, Caroline Levitt says that China is also scaling back oil purchases from Russia following India's suit, reiterates call for its allies to stop engaging in trade with Russia.
Prime Minister Modi will virtually attend the 22nd ASEAN-India Summit, which starts from October 26th in Malaysia. Meanwhile, the MEA said External Affairs Minister D.S. Jaishankar will represent the Prime Minister at the 20th East Asia Summit in Kuala Lumpur on October 27th.
TSE clears proposal worth about rupees 79,000 crores for enhancement of the capability of the armed forces. NAG missile system, ground-based mobile systems and high mobility vehicles will be inducted.
All eyes today will be on Dr. Reddy's. The pharma major is expected to report revenue growth of 9%, but margins remain narrow on Revlimid price erosion and weak North America sales. SBI Life is likely to post a steady quarter with 3% AEP and VNP growth, margins flat amid GST impact.
Back to Buy Now, Sell Now show where we get you answers for all your stock-related queries. And let's continue that once again. We have both of our experts, Kunal Bothra as well as Kunal Parar with us to guide you the best way possible. And so many queries are already trickling in. Let me take up the next query that we have. And this one is coming in on ABB, wherein Ignitis from Kolkata is holding 10 shares of ABB at a price of 6,497 rupees. Kunal Parar, what's your view on this particular counter? Can he hold for a long term? It's been 6 months that he already has this counter in his portfolio. Would you advise to hold on or average at these levels? I think you have to.
May I know the name again?
The stock is ABB India. Buying price is 6,497 rupees.
EBT India, right?
ABB India. The capital
Okay, ABB
company,
India.
Yeah.
Okay. Right now, stock is trading at 5,188. Nothing to worry about this counter. We may see a very good upside momentum in this counter from the present level up to the level of 5,500. And if stock sustain above this level, then further upside would be there up to the level of 6,260. So, hold this stock. We may see some good bounce back in this counter.
Right, so that's the recommendation coming in for ABB India. But then let's take Yuvraj's question, and he's writing this from Chennai, and he says that he's got 50 shares of Godrej Properties at 10% loss and REC 500 shares at 20% loss. He plans to hold it for long term. He wants a funda as well as a technical check. So. Kunal Bothra, I think we'll start with you. Or he's in loss in both of these counters. What would you recommend?
See, I think you should hold on to both of these names, Godrej Properties as well as REC. So I think Godrej Properties is emerging out to be one of the better performers from the entire real estate pack. We've seen the stock recovering more than 10% in the last, I think, few days of this market rally, and especially for the realty pack. The stock is back again above its 200 moving average. It's managed to break past about the crucial barrier of 2,000, 2,200 in this last few days of the rally. So this indicates that we are looking at a potentially multi-week uptrend which could be building out for Godrej Properties from the realty pack. REC could be a mystery stock, because the stock has underperformed consistently for the last, I think, 5 or 6 months, if I'm not wrong, and it's been dragging, lower below the range of 400 for REC for quite some time. So, that could be a stock which I would suggest that maybe I think above 400 levels is where you can look to average. As of now, hold on both of these names. Godrej Properties, I believe that the stock could be due for a decent 5 to 10% upside over the near term, which means that the stock should come back to a cost price pretty quickly. And for REC, I would suggest an averaging out only above 400 levels.
All right, so that's the take coming in on both of these counters. But we have a live caller with us, and Ramesh from Hyderabad is joining us on the phone line. Hi, very good morning. Go ahead and ask your query.
Good morning, I'm Ramesh from Hyderabad. Hello?
Yes, morning, Ramesh.
I would like to invest 1 lakh each in Capri Global and PG Electroplastic at the current market price for long term.
All right, so 2 counters on your radar.
I want fundamental view.
Okay, Ramesh, today we have the tech special. So both of our experts are from the technical side. So let us help you with that for today, and maybe you can once again write to us when we have a fundamental expert, and we'll definitely try to guide you. But Kunal, since we have you with us, Capri Global and PG Electroplast, what are the charts telling you? Help us understand that.
So I think Capri Global as well as PG Electroplast, both of them are interesting stocks. Capri Global specifically, I think at levels of 200 where it's trading right now, I believe it's a good stock to invest into. it seems that over the last 4 or 5 quarters, there has been a major volume up move for KP Global, and the stock has formed a base at 160, 180 levels thereabout. So, and it's trading at 200 levels, which means not too far away from the base or the support prices for the stock. So I would suggest that's a good trade to look at current levels, and especially with a longer term time horizon. But I think for PG Electroplast, the trade could be a little bit tricky because the stock is extremely volatile. I think very recently we saw the stock correcting from I think around 750, 800 levels to now sub 600 mark, and the weight of that selling for PG Electroplast has been that the stock is unable to see any major kind of a recovery for itself. There have been few bouts of rallies into the stock price, but nothing major in terms of the price correction the stock had already shown. So I think PG Electroplast I would suggest an avoid as of now, but I think Capri Global could be a good bet at current levels.
All right, so a thumbs up for Capri Global, but avoid PG Electroplast. Let's move on and let's take other WhatsApp question, and this is from Mr. Balakrishnan. And Kunal, he's got 23 shares of MTAR purchased at 2,300 a year back, and he wants to know whether he can hold it at the current price.
I think you can hold it. I mean, I'll advise the viewer to hold the stock because this is the second consecutive month of a price uptrend for MTAR Tech. From 1,400, the stock has jumped up to almost 2,200 levels. The volumes which the stock has shown in the last 2 months are one of the best volumes I think since the last 2 years for the stock. So that tells you that this is a very strong volume backed buying. Now, this could also mean that potentially over the next 2-3 months, you might see the stock just about going into a time-wise correction first, where the prices go into some sort of a mean reversion. But then if your time horizon is 6 months or 1 year plus, I would actually believe that the stock could come back to 2,600 plus kind of a zone. So I would suggest a hold on MTAR Tech if you already bought at higher levels. But then your time horizon has to be at least 6 months to 12 months range, if not more.
All right, so that's the take coming in on MTAR Tech. But with this, let me also welcome Ajit Mishra on the show. He's our second expert for today. And Ajit, hi, morning. Good to be speaking with you. And we have a first query for you coming in from Sudhir Kulkarni from Pune. And he wants a take on Bandhan Bank. He has already purchased this counter at a price of 150 rupees. What to do with this one? How is the setup looking like? The results are also due on 30th of October. But what are the charts telling you? And along with that, how do you see Axis Bank? He's been holding this stock at a price of 1100 rupees. What's the take here?
Good morning, Kavita. So, see, Bandhan Bank and Axis Bank, two almost diverse set of stocks that he has been holding within the banking basket. One which is continuously maintaining the negative trend. Though of late we have seen recovery phase, the stock is also participating in the move what we are seeing in the banking pack overall. But still, that overall trend is still negative, and 180 is where we have the next major hurdle. So until we decisively break that, this negative trend is here to stay. So in my opinion, since he's already holding excess and outperforming within the private banking basket, he can consider switching Bandhan to excess and for the consolidated position, or he can look for buying opportunity in ICICI Bank, which is available after the recent correction post the numbers. So and it's currently holding around its long-term averages. So both ways he can consider exiting Bandhan and switching to Axis or ICICI.
All right, so you can switch to Axis or ICICI. That's the recommendation coming in from Ajit. Ajit, the next question is from Mrs. R. Godrej from Mumbai, and she is confused between TCS and Cognizant for 10 years or more. That's the time frame she's looking at. So it's an investment horizon that she's opting for. What will be your pick?
So nobody knows, honestly, Kavita, the kind of things which are unfolding in the IT pack, and I feel that yes, it's good to have a long-term time horizon, but at the same time, you should be regularly look for clues, especially for the sectors which is ever evolving, and we are seeing things changing every 3 months. But still, from the long-term point of view, I feel that TCS is a good bet, considering that large cap names are considerably better, when it comes to absorbing any kind of external shocks that we are currently experiencing. And we have already seen a very long, corrective phase in most of these names. So yes, one can consider accumulating the IT majors like TCS, Infosys, HCL Tech from the long term, time horizon.
All right, so that's the take coming in on the IT major TCS. But moving on to the next query, Ajit, one more query coming your way. This one is from Raja Ramesh, writing to us from Andhra Pradesh. He wants a view on CG Power and Tejas Network. The query is, which amongst these two is better placed right now? Which is your preferred pick? He's looking to invest in any one of these counters for the next 2 to 3 years.
See, CG Power definitely looks promising, considering that during this market decline where we are seeing underperformance from the broader indices, both mid cap and small cap, this stock is, after almost retesting its record highs, has seen marginal retracements. This clearly shows relative strength. Tejas Network, on the other hand, is trading closer to its 52-week low, so that indicates strong pressure in the counters. So one can, but yes, since we are seeing underperformance within the mid cap, small cap, you might find better levels to invest in fact, in the CG Power also. So maybe close to around 680 to 700 is a zone basically where one can start nibbling. And upside the 780 to 800 would be the first target zone. So yes, CG Power is something that one can consider accumulating on dips.
All right, and with that, it's time up on the show as well. Thank you so much, Ajit and Kunal, for being there for our viewers today and answering their queries. All right, so this is the last leg of Buy Now, Sell Now, and we will end this show with a very special interview. In the latest edition of the interview, market veteran Manish Chokhani says we must stay invested, patient, and let compounding do the heavy lifting. He adds that tech, pharma, autos, the game is changing fast across sectors. AI is shaking up everything. The real winners will be the users of new technology, not the inventors. Here's where he thinks India's next big sectoral leadership will come from.
There will be a time over the next 10 years where a lot of these banks will necessarily have to go outward with our Indian businesses. For example, RBI has opened acquisition financing. Historically, all that business went to the foreign banks. Now it could be the Indian banks which could be the providers for a lot of this capital to you. It was inconceivable for me to think 30 years ago when I started. The largest foreign investor was Capital Group, and they were a sub-$100 billion equity group globally. Today you have a $100 billion mutual fund out of India. So there is a time when even all this will globalize. So it's fun. It's something to look forward to.
It is exciting times. But you've always said that real ownership lies in building or owning a business for the long term. We're living in the very quick QCOM, instant gratification era. How is it that you actually change the mindset of this young generation to actually hold for the long term and build for the future?
So, well, the reality of life is you get everything not with instant gratification, but delayed gratification. Yeah. And even the examples of the companies you're giving, it's not like Zomato was built in 2 years. It takes, as they say, it takes 7 years or more to become an overnight success. And all these people have put in the hard yards. Even there's a company which we had invested in early called Lenskart.
Yes,
which
is
to invested back 10 years ago.
Yeah.
And at that time, I think it was probably a $100 million pre-money number on which we had gone in. And it's probably going to come I'm not giving the number because I don't want to steal their thunder on their IPO, but it's billions of dollars. So it takes its time, and it's not like every person is cut out to be an entrepreneur. Our market gives you a chance to come into equities through mutual funds. But people who have the wherewithal, if I give a statistic, the richest investor in the stock market would say have reached 50,000 crores, which is a staggering number by any yardstick anyway. But if you take the promoter of 125th number company in India, his wealth would be in excess of that. So in the markets, you have to be number one to become 125 on the entrepreneur list. So isn't that something much more worth trying if you have the ability to do that? And if not, of course, this is great. Like I saw recently, someone puts out Shah Rukh Khan makes $1 billion in his wealth. By being the number one megastar for 30 years, that's the number he reached. So stock market better than being a movie star, but being an entrepreneur is better than being a stock market investor.
Makes sense. The numbers speak for themselves. But you know, you've always also emphasized on think global. You've always emphasized that we can't be in this inclusive
Frog in the well.
Frog in the well kind of approach will not work in today's dynamics. But at the same time, what's happening in the world is this tectonic shift, so to speak, right?
Sure.
Everyone is looking inwards, and that seems like an ideology which is coming right from the top. Can it survive, really?
So, if we are 3-4% of global GDP and 3-4% of global market cap, and if we are content to remain 3-4% and be a distant number 3 to America and China, which is okay. But if we aspire to closing the gap between a 4 trillion and a 20 trillion, surely you have to take share of global markets. And that global market, like I said, cannot become just a processor for IT or pharma or small amount of manufacturing. It has to become a mega owner of IP and brands, because the value capture really happens there. And you have deep domestic markets now. So for example, Indian two-wheelers are global because they had depth in the domestic market. Now you may laugh that, oh, they are only selling into Latin America or Africa or rest of Asia, but it is a global market. It doesn't mean globalization only means I have to go and sell into the US.
Yeah.
There are markets out there in the whole world. And again, like I gave you examples, whether it was Titan or Dabur or Air India or Indian Hotel, I'm just giving them as illustrative thoughts.
Brands which can become big.
Similarly, if you can build the Zoho in India, right? Now, if you move 50 million people onto Zoho platform, it is a sizable global platform. Like the Tatas took over Tejas network and we built our 5G stack, and they will now build the 6G and so on. It's not like we cannot do it. Our thought process was, first let me secure my current, then I think about the future. I think now the current is secure.
Is it intent or is it just contentment of being homegrown and doing well in the
I think
home market?
there was some degree, I would still say it's not a slam dunk, because our difficulty of doing business over here is not something which is gone. The difficulty of the court processes and the processes which delay you in the bureaucracy are not something you wish away. There are a lot of companies which go outside and build, and they get to success much faster and they can become bigger. Because again, the same example, if people can leave India and become CEO of Google and Microsoft and so on, it's not like there was lack of brain or lack of understanding of technology. It's how do you create that ecosystem? And I think the triad of putting defense, automobile industry in particular, and universities together is really how most technologies have developed in the world, because really auto use is really half of most countries' manufacturing GDP. Because they're putting and consolidating everything together. And that's why they have the wherewithal to take technology and putting things together and going down that path. And the IT side of technology, which really comes out of defense, because now most of defense is not about guns and arrows. It's really what can you do about cyber? What can you do in space? Like if you had not built, say, this Akash Tir domestically, with 4 or 5 S-400s, you won't have been able to even counter a Pakistan. Imagine what would happen if the other larger neighbor were to do something with you. So clearly it is, again, this technology, defense, auto, universities, all has to come together, and it is happening. And the government, I think, is also conscious and playing down that path.
So I want to link it to investments. How is it that you actually make your portfolio go global, and especially for the retail investor who doesn't have many options, and you're trying to build a portfolio which is not just China plus one, it's US plus one, and maybe then RIC, as you describe it, Russia, India, China as well on
Everyone
one
needs
end.
to play, So, well, for a retail investor, first of all, you play to your strengths. So if you know cricket, don't try and play soccer. So if you know I'm not going to beat a mutual fund manager, and there are so many good managers out there now, and you can hire them literally for less than 1%.
Or wealth managers.
Right?
Yeah.
And another theme of mine has been, if you remember, every year we speak about it, is the golden period of entrepreneurs.
Yes.
Is the 40s to early 50s. If you look at our fund management business, don't you see all of them around?
Yeah.
Now, even if I take the largest
one right
funds,
in front, Karan Bhagat.
Yeah. We spoke about him in the
Yes.
past, or even Dipinder, who's running Zomato, or even the fund industry. If you take Vasan at SBI, or you take Chirag and Navneet at HDFC, or Naren and Anish at ICICI, or even those who've gone out on their own There's Pankaj Tibrewal, Vikas Khemani, Sunil, so many of them around. And they're talented, good allocators of capital with good track records. Why is a retail guy trying to beat them? Do what you're good at. Let these guys be the stewards of your money. You don't make money in India honestly by buying an ETF because the market is still broad basing. But active managers like this who buy stocks bottom up do create value for you. You have to have patience. In every cycle, everyone's not going to win every quarter, every 6 months. Like in a company. Companies also go through their phases and the funds will also go through their phases. But if you're by and large with the right steward of your money, I think there's tremendous wealth to be made here. Even to go global, there are opportunities. A lot of the fund houses had indeed put out products through which you could access global markets. Even stuff which everyone knew last year or year before, that there will be a move toward hard assets thanks to the debasement of currencies, has played out in gold and silver, and that bull market is still alive. Even those products were available to you. So it's really a question. At heart, you need to sit back and think, how do I want my asset allocation? Historically, Indians put money in real estate and gold as a kind of anti-inflation hedge, where the Indian currency kept losing value. It's also now playing into the global inflation, which now the US and the West has unleashed. So this trend is only going to accelerate. It's not going away in a hurry. But that's a place, what I call the fear trade, that you don't want to lose. So you park money in real estate and gold. The hope trade is always equities because you can grow the business and become much larger. And there are opportunities in India to do that as well. So if your asset allocation mix is okay, your position sizing is okay, you don't get stampeded out whenever some kind of global turmoil upsets our markets. And at that time, if let's say you have 2 years of your expenses on the side or something saved for a rainy day, or maybe always 5-7% cash available to buy some great opportunity, I think you'll be fine.
Yeah.